This conference will now be recorded.
Welcome, everyone. Thank you for attending the Patchogue-Medford Library's Ask the Expert series. Tonight we have realtor expert Stephen King of Homes with us. He's going to talk about home buying and home selling. So if anybody has any questions throughout the presentation, feel free to unmute yourselves, or you can enter it in the chat box, which I will be monitoring. That's in the upper right-hand side of the screen. I did put some other things in the chat box, a couple of links. We have a virtual program survey. We'd love if you could take a minute to fill out our list of our other virtual events, and there's the contact information for someone from Valley.
Conference will now be recorded.
I will turn it over to Stephen, and thank you so much for being here tonight.
Hey guys, I don't know if you guys can hear me. Is it echoing?
Okay.
Hey, can everybody hear me?
Yes.
Yes, it's
Okay.
good.
All right, cool. So we're going to break tonight up into roughly 4 parts. First, I'm going to address the potential sellers in here, as that's going to be the most brief part of it. Selling is more of an individual basis. Your home is different than other homes, and coming in to evaluate your property and understanding what your buyer pool is a case-by-case scenario. So I'm going to circle back to that. But the second part that we're going to go into is going to be for home buyers. And what I'm going to do is walk step by step through the home buying process. I'm going to break down the expenses. I'm going to show you guys what to expect, what to prepare for. Thirdly, I'm going to break down the different types of mortgages there are, so that way you as a buyer can understand what your options are, what financing terms mean. And then lastly, what I'm going to do is I'm going to break down an actual mortgage payment. I work with the best first-time home buying bank in New York, and for specific reasons. So after I break down that payment, it will help you understand why this bank is so beneficial to first-time home buyers. And in between each step, we'll take questions and go from there. So first, to my sellers, I don't know who in here is in Patchogue or what part of Suffolk County you may be in. I personally specialize in Patchogue. I sell all over Suffolk County. I've sold in Staten Island. I've sold out east. I've sold in Nassau. And right now, what I am seeing is it is extremely competitive for buyers, and it is a seller's market to the T. We have the largest buying pool in history of first-time home buyers. Just to give you guys an example, I listed a house in Bohemia last week, and within 2 days, that home sold for $25,000 over asking price. Now, how I get my sellers $25,000 over asking price are using specific techniques by tapping into the proper buying pool using the right price range. And I have other techniques using open houses, and that's more of an individual case-by-case scenario. So for my sellers, it's important to have me come out. It's for free. I'll take a look at your house. I'll let you know exactly what it's worth on paper. I'll let you know what the market is most likely willing to pay for it. And I will let you know the best strategies for your specific home to leverage these market conditions to get the highest price. For instance, why it's a case-by-case scenario. Today, I just went and took a look at a $600,000 house on a lake in Patchogue. The techniques that I'm going to use to sell that house are going to be far different than the techniques I'm going to use to sell a $400,000 house in Patchogue. A $400,000 house in Patchogue is a first-time home buyer range. A $600,000 house in Patchogue is a more established buyer looking for different things with different needs. So again, the selling part of this is going to be much shorter. It really is a case-by-case scenario. You guys are more than welcome to have me come out to your house for 20, 30 minutes, and I'll evaluate your house individually. Any questions from sellers specifically?
I don't see anything in the chat box.
Okay, cool. All right, so I'm going to now speak towards my buyers. This is going to be very informative. There is a lot of detail that I'm going to cover right now. And if you don't remember anything from that, that's okay. I can send you a PDF of basically this presentation that breaks down step by step the home buying process. First off, if you are a first-time home buyer, or any buyer in that matter, the first step is getting a pre-approval, finding out from a bank, making sure you qualify, and if so, how much for. A banker is the first step in the process because we want to make sure that we're not shopping around in a $400,000 price range, only to find out that our budget is really $300,000. So that banker is going to let us know exactly how much you qualify for, what you can afford, and what our budget is. So usually when I'm on one-on-one meetings, I send my banker's information to the buyer and I have them speak with them right after the meeting. In this case, Crystal's going to send the information for the banker into this text box, and you'll be able to contact them individually to look for approval. That banker is going to tell you whether or not you qualify, if so, how much for, and if not, what you have to do in order to qualify, whether that be pay down some debts, wait a little longer, whatever factor it may be. So first step is getting the pre-approval. After we get a pre-approval, I'm going to get you as a buyer set up in a program called Prospect Search. From my end, I insert the list of towns my buyer is interested in looking in, along with their price range. And what that program is going to do is it's automatically going to email me and email you, the buyer, properties that hit the market under your criteria within an hour they hit the market. The reason that is so important that you're notified within an hour it hits the market is because we are in a seller's market. It is extremely competitive. If a property pops up on a Monday, we cannot wait until Friday to get in there because most likely it's either gone or there are so many bids that you're going to have to pay $20,000, $30,000 over asking price to get that home. So the key to this home buying process is being first in line. So when a property pops up on a Monday, we have to do our best to get in there as soon as possible. What I have my buyers do is a property that catches their interest, they text me the soonest day and time that works for them, and we get a showing scheduled. I recommend to my buyers that we see as many homes as possible. It's a lot of extra work to do that. However, the internet is very deceiving. What houses look like on the internet do not always portray what they are in reality. Some houses look better in person, some houses look worse. But the most important reason why I recommend seeing all houses is because the more you see as a home buyer, the more homes you see, the more you're gonna know the minute we walk into the right one. If you have seen 20 houses in your price point and in your area, by then you will become somewhat of a mini expert in your price point and in your area. And that's going to help you because when it comes time to submit an offer, if we are in a bidding war up against many other offers, you're going to have to pull some triggers and get aggressive. And it's tough to pull the triggers you're going to have to pull if you're not experienced in your price point. So the rule is see as many homes as possible and be first in line. After viewing homes, once we find the right one, we will submit an offer. When you submit an offer, if that is accepted, then becomes the next step in the home buying process, which is a home inspection. That is going to be your first expense in the home buying process. A home inspection costs about $500 or so. And what the home inspector does is they come in there, they don't care about me, They don't care about the seller. The only person the home inspector cares about is the buyer. They are there to uncover any issues that you, the buyer, may need to be aware about as a future potential owner. In the event that the home inspector uncovers a $1, $2, $3, or $4,000 issue in the immediate horizon for this home, a renegotiation may take place. The buyer can renegotiate after the inspection for the seller to either fix any issues, or for the seller, what I recommend is the seller compensates you and gives you a credit at closing for you to fix the issues once you own the home. You don't want a seller taking care of problems. They're going to do it as quickly and cheaply as possible. So I'd rather them give you, the buyer, a check at closing, and then you bring in your trusted people once the home is yours to take care of the problem. Now, after the inspection is complete, again, there may be a renegotiation. Once that renegotiation is finalized, it will then come time to go into contract. Up until this point, you are not legally committed to the house whatsoever. After the inspection, if you decide this isn't the house for you, if it's more work than you want to take on, you can still up and leave and absolutely nothing happens. You are not committed until sellers' attorneys will draw up contracts based on the verbal agreements. They'll send them over to you, the buyer's attorney. The buyer's attorney will call in the buyer, have them sign contracts, and also submit part of their down payment. So, for example, if the buyer is putting $30,000 down, they may not be putting that much down, but in this example, if they are, 10 of that may go upon signing contracts, and the remaining 20 is delivered at closing. The reason that is done, that $10,000 will go back to the seller's attorney for them to keep, to ensure that the buyer's not going to up and leave for any unjustified reason. Otherwise, the seller gets to keep that down payment. So once you have signed, submitted down payment, and the seller has signed also, you are in what's called full contract. That's a little celebratory moment. That means the seller is committed to the buyer, and that means the buyer is committed to the seller. Any questions up until this point, guys? No, okay, no problem. So once you're in full contract, three things are going to happen. Don't worry, the process is almost over. Once you're in full contract, the buyer's attorney is going to order title. Title is going to be one of the buyer's largest closing costs. Title costs about $3,500 to $4,000. That's paid at closing. And what the title company does is they make sure that the home is legally safe for the buyer to obtain ownership. They're making sure that there's no liens, no judgments, no lawsuits, no claims to the property. And that's going to happen silently in the background for the title company. The second thing that's going to happen is the buyer's bank is going to order an appraisal on the property. The appraiser is going to come in, take a look at the property, and they don't care about the buyer. They don't care about the seller. The only entity the appraiser cares about is the bank. The appraiser is there to protect the bank, to make sure the bank's not lending $400,000 on a house that's only worth $300,000. They're also there to make sure that the bank's not lending hundreds of thousands on a house that's about to fall down. So that will happen silently in the background also. And the third thing that will happen once you're in contract is your bank will ask you, the buyer, for a ton of paperwork. They're going to ask for W-2s, tax returns, incomes, bank statements, a ton of different paperwork. And the sooner the buyer hands that paperwork to the bank, the sooner the bank is able to issue a commitment letter. The commitment letter will list the final conditions the buyer needs to meet in order to get it clear to close. Once the buyer meets those conditions, the title is cleared and the appraisal has passed, then a closing date is scheduled and a buyer does a final walkthrough of the home before closing to make sure that nothing was damaged in the move-out process. If there were any damages, the seller has to compensate the buyer for those damages at closing. Then you close and the home is yours. So that's the home buying process, pretty much summed up really quickly. Are there any questions about the actual process itself?
We don't have anything yet in the chat box, but if there are questions at all throughout this, you can type them in there and I'll be sure to get them voiced if you don't want to unmute yourself.
Okay, great. So how long does that time frame take? There is no telling how long it's going to take to find the right property. On average, it could take 1 to 2 months to find the right property and roughly 45 to 60 days to close on it once you're in contract. So that's really the process wrapped up in a nutshell. In terms of closing costs, you guys do not pay me as the buyer's agent. I am not compensated by the buyers. I am compensated by the listing agreement that the seller has with the listing agent. The listing agent's office pays us to bring in buyers. And even though I'm compensated from the listing side, I don't care about the listing agent. I work for your best interest, the buyer, if I'm your buyer's agent. So that's the home buying process. Now, what I'm going to do from here is I'm going to break down the different types of mortgages there are, so that way you can understand how they impact you as a buyer. There, you basically have conventional loans, Sony Mae and FHA loans, and then you have VA loans. Conventional loans are the cleanest type of financing there is. It is between a buyer and a bank, and that's it. Those are the only two entities involved. They are most preferred for buyers, and they are actually most preferred for sellers. The reason being is when an appraiser comes in to evaluate a home, let's say a house has a finished basement that was finished illegally. 60 to 70% of finished basements do not have COs. Conventional financing is not going to care that basement was finished illegally. Whereas Sony Mae or FHA loans are more strict. They may not be okay with the illegally finished basement, which means the seller is either going to have to pay to finish the basement legally or cancel the deal in general. And if they have to go through the CO process to close on the house, that can cost them 3 to 6 months and upwards of $10,000 in expenses. So sellers, when they're evaluating offers, prefer deals that are conventional financing. FHA and Sony Mae loans are loans that are most synonymous with first-time home buyers. In FHA and Sony Mae loans, you have a buyer, a bank, and then a government entity that oversees the whole process and subsidizes the loan for the buyer. With FHA, it's a federal entity, and with Sony Mae, it's the state of New York. The reason these programs are most synonymous with first-time home buyers is they are more forgiving when it comes to debt-to-income ratios and credit. So if you have a credit less than, I believe, 620, you won't be able to qualify for conventional financing, and your only option is going to be FHA Sony Mae. Some first-time home buyers are not as established, and they may have to use FHA or Sony Mae to make up for poor credits. Or if you carry a lot of debt, maybe student loan, credit card debts, Sony Mae and FHA will issue you a bigger mortgage amount than conventional financing will. So for example, if you're carrying student loan debts, conventional financing may say you can only purchase a $300,000 house through us. But if you go FHA Sony Mae, you can purchase as high as $350,000. The reason that makes a difference is there's a big difference between a $300,000 house and a $350,000 house. So that's why they're more synonymous with first-time home buyers, because they're designed to help buyers who aren't as established. And then below that, you have VA loans, which are designed for veterans. They're the same thing as Sony Mae, FHA, a little different in processing, but they're for veterans. You have a buyer, bank, government entity, And then it allows veterans to borrow 100% on the home. They do not need a down payment in order to purchase. So that's the breakdown between the different mortgages, between conventional, Sony Mae, FHA, and VA. Are there any questions regarding mortgages with all that being said?
I don't see anything in the chat box, but anyone can feel free to unmute themselves.
I'm sorry, I had trouble hearing that. What's that?
I don't see anything in the chat box yet. I do have a question though that came up. Hold on. Somebody is asking, how about selling from the seller to a buyer without using a bank or any of the FHAs or anything?
I'm sorry, can you say that one more time?
She says, how about selling from the seller to the buyer without using a bank or FHA? So
Good question. That's when the seller holds the note on the property. That is a more privatized deal. Those are very rare. That's when the seller says, look, you can pay me back for the home instead of paying a bank back over the course of whatever the agreement is. The seller will hold the note, which means that if you stop paying the seller, then the seller can foreclose on you to regain possession of the home the same way a bank would. Most sellers are not in the position to carry notes. They don't like to. At the end of the day, sellers aren't banks. They don't usually have their finances structured to do that, but there are cases where that does happen. In those scenarios, you bring in the attorneys and you have the attorney representing the seller, checking with the attorney representing the buyer, and at the end of the day, they're drawing up agreements that are legally safe for both parties and that both parties are okay with. But those are very, very, very rare. Another reason why they're usually rare is if a buyer does not qualify to purchase a home using a bank, that typically means that statistically they are a risky buyer. There's a reason a bank usually won't lend money on to that buyer. And so sellers usually aren't comfortable with that, because if a bank won't accept it, why should a seller who's not designed to, who's not fluent in that kind of thing? That was a good question, though. Any other questions? I saw something in the chat here.
Yes, we just got another one. Well, I have one from before too, but that one is probably a little more detailed, so I'll ask it in a moment. But so I'm gonna shop around. I got pre-approval for an FHA, the SONYMA, and a conventional loan. When I go to put an offer on a house, will there be a preference to use a conventional from the seller?
Absolutely. Again, FHA and Sony Mae deals, because you have a buyer, a bank, and then a government entity, there are more hoops that the loan has to jump through in order for the loan to be finalized and approved. So not only does a buyer have to adhere to the bank's requirements, the buyer also has to adhere to that government entity's requirements, aka the Sony Mae or FHA entity. Not only that, but the house itself has to be approved by the FHA Sony Mae guidelines. So, for example, if a property, let's say you have an illegally finished deck. Again, 70% of decks do not have COs, which means they are illegally finished. Sony Mae and FHA loans may come in during the appraisal and say, we are not okay issuing a loan on a property that has illegal work done. Not to mention, Sony Mae will require, if there's chipping paint in the house anywhere, that's going to have to be fixed. If there is a staircase with more than 2 stairs and does not have a hand railing, that's going to have to be put in by the seller. So Sony Mae and FHA have more requirements for the home to adhere by. And if you're in contract and the only way to close a deal is to put in handrails, paint the hallway, paint the exterior of the house, go get a CO on the deck or rip the deck out, now that's going to cost the seller much more money than another deal that has conventional financing. Conventional financing is not going to care about an illegally finished deck. They're not going to care about a handrail missing going down to the basement. They're not going to care about chipping paint. So when I'm working with sellers, if we have 5 offers, or let's say we have 3 offers on the table, if one of them is FHA Sony Mae and that's the highest offer, and the other ones are conventional financing, I'm working as hard as I can to get those conventional loans to either match the FHA Sony Mae or go above, because FHA and Sony Mae is going to be more risky to my seller. I have seen sellers in the past, happens more very commonly, that they will accept a conventional deal even if it's $5,000 or $10,000 lower than the FHA deal, just because it's safer and more bulletproof. Any other questions regarding that?
Great information, thank you. So just to reiterate, if you're wanting to sell your house as is, then you probably wouldn't do it with the FHA, correct?
What's that? I'm sorry, say it again.
The buyer goes through the FHA, right? If someone wants to sell their house as is, then you probably can't sell it.
Hey, Crystal, I'm sorry. For whatever reason, it's a little choppy. I'm having a little difficulty hearing you.
Okay, let me move and see if it's my connection. Is this any better?
Much better, yes.
Okay, sorry about that.
That's okay.
So just to reiterate, if you're wanting to sell your house as is, then you probably can't sell it as an FHA.
Crystal, one more time. I'm so sorry.
No, that's okay. I apologize. If the seller wants to sell their house as is, then you probably wouldn't do it via the FHA.
If the seller wants to sell their house, let me see if I could check the chat. 1 second, because it keeps breaking up in that moment. Show my webcam. 1 second, guys. Let me just check. All right. If a seller wants to sell their house, Crystal, what is the other part of that?
If they want to sell their house as is, then you probably can't sell it as an FHA.
Very good question. That's where you can have an expert, a realtor, come in, take a brief look at your home. I'm experienced in FHA and Sony Mae loans. I could take a look at a house, get a little bit of detail on it, and I will know right off the bat where FHA and Sony Mae loans are going to have a problem. If you have all of your COs, there are no open permits, you have proper hand railings, your house is up to date, you are most likely not at risk of Sony Mae or FHA causing a problem for you. But if you're selling your home as is and you are completely unwilling to touch a single thing, and your home is, maybe outdated in a lot of different areas, you are most likely going to be better off going with a conventional deal, just to avoid any obstacles. Now, here's the thing. If you go into contract as a seller with a buyer and the appraiser comes in for an FHA Sony Mae deal and says, after seeing your home, the bank will only issue you a loan if you take care of A, B, and C, and you say we're not going to take care of A, B, and C, then the buyer is going to have, then the contracts get canceled and you have to start over. That can waste 2-3 months of your time. But just because a house is as is doesn't mean that it can't be sold to an FHA or Sony Mae buyer. It really depends on the condition of your house and a couple of other details. Again, if you live in Patchogue or Suffolk County and you need me to stop by your house to point out for you what things you may be at risk at if you were selling to an FHA Sony Mae loan, I can absolutely do that for you. I've seen some houses.
Thank you.
Sure.
There was a question earlier, if you can hear me okay.
Yes.
Okay, someone wanted to know what the impact of COVID-19 is having on the selling process.
Very good question. COVID-19 has made it even more of a seller's market. That is very shocking to a lot of people. A lot of non-experts before this happened thought that this was going to crash the housing market. It has only accelerated it. Here is what happened. COVID-19, well, before COVID, the reason we were in a seller's market is because there are more buyers than sellers. For every seller, there is 4 or 5 buyers fighting over that house. When COVID-19 hit, it didn't necessarily scare first-time home buyers as much as it scared the people who were selling their homes. First-time home buyers are usually younger people. We noticed that they were still shopping around unfazed by all of this. So now you had the same amount of buyers still looking for homes. They couldn't wait. Maybe they had leases that were coming up, whatever the case may be. They still needed homes. But sellers completely stopped listing their homes when COVID hit. So now for maybe out of 30 buyers, there were 5 homes to choose from. Now you have 30 buyers with 2 homes to choose from. So it lowered the inventory even more, which pushed supply and demand even more in the seller's favor. Right now, what I'm seeing, I have a buyer yesterday who walked into a house in Medford. They absolutely loved the property. They wanted to submit an offer. They really wanted to go after it. They said, Steve, we are willing to pay $20,000 over asking price for that home. I called up. I had a long conversation with the seller's agent. And it turned out the seller's agent said, don't even bother. We have so many offers over that number that you're going to be 7th in line, and we have better terms and conditions. So that house sold for more than that with 6 offers ahead of us. $20,000 over asking price wasn't even close to getting the job done. That was all a result of COVID-19. You have a pool of buyers who were getting ready to purchase between March and June, and now those pool of buyers who usually would have been satisfied are now still left over competing with the summer market. The spring buyers are grouped in with the summer buyers, and they're all competing over very limited inventory. So if you're a seller right now, COVID-19 has helped you. Keep in mind, though, something I want to point out for sellers. If you're selling your home and you also have to purchase a property, remember, you are now a buyer as well. Those are 2 separate transactions, which means you have to jump into that very competitive pool as a buyer. And now you have to structure your sale in a way that's going to allow you enough time to go through the market and compete. Whereas it used to take my buyers a month or so to find the right house, now it's taking like 2 months because there's less inventory and they may lose a deal on the way. So I hope that answers that question. Any other questions regarding that?
It's very interesting. We had another question that said that they've seen some houses that are right outside of a flood zone. Have you seen over the years the flood maps changing? Do they change?
They can. At the end of the day, it all goes by whether or not you have an elevation certificate. I have seen houses that are, if you're in a flood zone X, you are not required to have flood insurance. I have seen plenty of houses that are in flood zone X right next door to a property that requires flood insurance. And the reason that property may require flood insurance is because if their elevation is a little bit below, or they do not have an elevation certificate that can keep them in that flood zone. In the event that you are in a flood zone and you do raise your house and get an elevation certificate, that can take you out of, that can put you into a flood zone. That can change your flood insurance requirements. So, and flood insurance requirements are different on all homes. If you're in a flood zone, your insurance quote, you may have to pay an extra $1,500 a year, but that could get as high as an extra $5,000 a year. It really depends. It's a case by case scenario. Any other questions with that before I break down a mortgage and go over Christine Intrabartola and how she impacts first-time homebuyers?
I had one other quick question from a fellow staff member. Wanted to, what is the difference between a realtor and a real estate agent, or are they the same thing?
Sure. A realtor is that somebody who is on the board of LIBOR, Long Island Board of Realtors, and they are, it's an extra certification. There are real estate agents who are not realtors, but all realtors are real estate agents. It's an extra form of certification and protection. That's basically what that is. And realtors pay to be to be that.
Thank you. And I guess just quickly, how does one become a real estate agent? Can it be profitable to do so, like as a side hustle?
That's a really, really good question. Anybody can become a real estate agent. Believe it or not, it's pretty simple and easy. I will point out that 90% of real estate agents are part-time doing exactly that. However, within 2 to 3 years, 90% of every real estate agent drops out of the business. They cost it. Real estate, you only get out of it what you put into it. And if you're looking to become a realtor, I actually don't recommend it if you're doing part-time. You're going to put more hours into it than you're being paid. You're better off becoming a bartender than a part-time realtor. To be honest with you, the average real estate agent only sells 4 homes a year. That's very, very scary, because that means that people are putting their faith and trust in somebody who's technically not an expert. If you're making your largest, most sentimental transaction with somebody who sells 1 home a year, you're running a very high risk of them making a mistake. And mistakes in real estate can cost you tens of thousands of dollars. So I'm a full-time agent. I sell a lot more than 4 homes a year. I was voted a top 20 agent under the age of 40 for Long Island Board of Realtors last year. But you can become a part-time agent. However, in my honest opinion, I don't recommend it. If you want to if you want to go into real estate, do it full-time. Otherwise, it's not worth the LIBOR fees, the MLS fees, and the time that it's going to take. And you're competing with real killers. If you're going up against me for a listing or a buyer, I'm going to know a lot more than you, and it's going to be even tougher for you to gain clients. So hope that helps. Any other questions?
I don't see anything else. I have an email, yes, that I will share from somebody after this presentation.
Okay.
All right, go for it.
Okay, so what I'm going to do now is I'm actually going to break down a mortgage payment. I'm going to show you what goes into that mortgage payment, and then I'm going to show you why the bank that I recommend is the best for first-time home buyers. So let me reverse the camera real quickly. Bear with me. Okay, guys, we're doing it old school style, pen and paper. In a mortgage, you have four things. You have your, principal and interest. You have your property taxes. You have your homeowner's, insurance. And then you have what's called PMI. What PMI is anytime you do not put down 20% or more on your home, you have to pay what's called PMI or private and mortgage insurance. That costs about $150 to $170 per month in your mortgage payment until 20% of the loan has been paid down. The reason banks require PMI is for this example. Let's say you purchase a house for $300,000 and you borrow you put $10,000 down, you borrow $290,000. If the real estate market were to crash and now that $300,000 purchase is only worth $275,000, that means you owe the bank more than the home is worth. And if you were to stop paying your mortgage and the bank had to foreclose on you, they couldn't sell the house for what you owed them for it. So that means they'd be taking a loss. PMI or private mortgage insurance pays the bank the difference of what is owed versus what the bank can recuperate for the home in the event that that happened. So with principal and interest, this is your actual mortgage, what you're borrowing. It costs right now about $4.50 a month for every $1,000 that you borrow. So if you borrowed $300,000, you take 300 times 450, that'll get you about $1,350 a month in principal and interest. Next, you have your property taxes. This right here is your biggest decider of your monthly payment and of your closing costs. When you purchase a property, you have to pay, 6 to 8 months worth of taxes at closing to for your bank to hold in, an escrow account in case you were to stop paying the mortgage. So if you're purchasing a property with $12,000 a year in taxes, that's going to cost you $6,000 to $8,000 at closing. Whereas you purchase a property with $6,000 a year in taxes, that's going to cost you, half of that. So property taxes is the biggest decider of your closing expenses, which I'm going to go over again a little bit after this. Taxes. If you're buying a property with $12,000 a year in taxes, 12,000 divided by 12 is $1,000 a month. Versus, let's say you find a property with $7,500 a year in taxes, that's going to be $625 a month in your monthly payment. That's almost a $400 a month swing just in taxes. So this is the biggest decider of your monthly payment. The next, you have homeowners insurance. That's about $100 or $120 a month in your mortgage payment. That's not going to fluctuate much. If you have flood insurance, that goes up higher. And then you have PMI, and these four things combine to make your mortgage payment what you pay the bank every single month. The reason I recommend Christine over at Valley National, if you are a first-time home buyer, their bank will allow you to put down 3%. It's conventional financing, which remember is the best type of financing. You do not have to pay PMI, and your interest rate is a little bit below market value, saving you about $75 a month there. When you combine this with this, they're usually saving my buyers about $200 to $250 a month as compared to my next best banker. Another thing to point out about Valley is their closing costs for the bank loan are only $100 as compared to about $1,200 to $1,500 with another bank. They also do not charge you, the buyer, for the appraisal, where other banks will charge the buyer about $500 for the appraisal. So with that being said, again, I just want to break down closing costs in general. So I find on average, it will cost buyers roughly $12,000 to $14,000 in closing costs on top of their down payment. So if you're putting $15,000 down, you may have to be prepared to spend about $30,000 for the whole process. In your closing costs, you're going to have your 6 to 8 months worth of property taxes. You're going to have your title costs, your second largest expense, about $35,000 to $4,000. You're going to have to pay your bank, your bank's closing costs, which those can be, again, if you're using Christine, $100. If you're using another bank, they can be $2,000. You're going to have to pay your attorney. Your attorney's going to cost you anywhere from $1,300 a month to $2,000. I'm sorry, anywhere from $1,300 paid at closing to $2,000 paid at closing. You may have an appraisal fee and other miscellaneous fees combined in that. The reason it's a swing between $12,000 or $14,000, sometimes $15,000 is it all comes down to your property taxes. Your property taxes can literally sway your closing costs by $3,000 or $4,000. Any questions about any of that? What expenses will the sellers have? The sellers have less things to pay for than the buyers. The buyers have a ton of miscellaneous items they got to cover. The sellers are responsible for paying the listing brokerage. So depending on your percentage you pay to the brokerage, and the seller's going to have to pay for their attorney, and the seller's going to have to pay transfer tax, which is about $4 per thousand. So on a $300,000 house, that may be about $1,200. So sellers have brokerage fees, attorney fees, and transfer tax. And if you bought the home within a year and you didn't live in it, and you made money on it, you may have capital gains. But if you lived in the house for over a year, you don't have to pay capital gains. Any other questions with closing costs between buyers and sellers?
I don't see anything.
Okay, cool. Guys, I know that was a lot of information. And if you didn't remember a single thing that I just told you, that is completely okay. You guys can always reach out to me at my phone number, and you can pick my brain as long as you need to, so long as I have the time on my hands to answer your questions. And if I don't, I'll call you back at another time. But it's a lot of information. It can be overwhelming. I don't expect any of you guys to remember everything I just said. There's no way in hell. That took me years to remember. Not years. That took me experience to remember. So you guys are more than welcome to reach out to me, pick my brain with any questions you might have. If you need me to come in and evaluate your situation as a seller or your situation in personal finances as a buyer, I can do that whenever you want. Usually it takes about a 20-30 minute meeting, and that's it. And I also have some ebooks that walk through that process as well. So if you're a seller and you want to know the step-by-step process that you have to pay attention and what your responsibilities are as a seller, let me know. I can send you that link, and it's a quick 11-page ebook that will take you 90 seconds to go through. Same for buyers. It will show you, the buyer, what your responsibilities are, what you have to pay attention to, and it's quick and easy to go through. I hope that was really helpful. I'm going to allow a little bit more time in case there are any extra questions. I don't know if you're able to put my number into the chat, Crystal,
Sure.
or email address.
Go for it.
631.
Yes, I was going to mention. Oh, yep, 631.
624-1159.
Okay, great. Thank you. So that is in the chat box. And if anybody ever wants to send an email to the library, communityengagement@pmlib.org. If you have any questions or there's any information that I can get to you in between, we can do that for you too. So if anyone else has questions, you can unmute yourself and ask or type in the chat box. It was a lot of information, but it was great. Thank you so much for your time, Stephen.
Of course, my pleasure. And I commend all of you guys for even taking time to listen to this stuff, especially buyers. Buyers, if you think that you're 6 months or 1 year away from buying, right now is the time to speak with a banker, because if there's something that they catch in your finances that they tell you to tweak over the next 6 months to a year, that can make a huge difference. And that can either allow you to qualify for more money or have a lower interest rate. So now's the time to speak with a banker. Also, sellers, being proactive is very important. A lot of common questions I get from sellers is, Steve, I'm thinking about selling in 5 years. Should I renovate my bathroom and get to enjoy it for those 5 years? Well, that usually matters heavily on what the buyer pool of your house is, where you're going to go in those 5 years, how much equity you have. I have literally told people, some people told me that they wanted to sell their home to buy another one, and in 10 years they were going to move to Florida. And I told them, do not do any of that. Don't sell your home at all, because you're just going to spend extra money in closing costs on a sale. You're going to spend a lot of money in closing costs on a buy, and then you're going to have to do that all over again in 10 years. That's 4 transactions of closing costs, and you are going to lose money and equity in that process. So if you're thinking about selling your home to buy another home and you're planning on moving to Florida in 10 years, don't do that. If you can make your home stretch, make your home stretch. You don't want 4 closings over the course of 10 years. There's no way for you to recuperate that money. Also, some people think that, they say, Steve, I want to sell, but I'm going to wait 6 months because I want to finish off the basement. I usually never recommend people make finishes to their homes in order to sell it. You are in such a hot market right now that you could be risking taking advantage of the buyer pool that you have. You may go in and finish the bathroom and paint it gray, and then a buyer comes in and says, wow, I would have paid so much more for this house if that bathroom was white. You don't want to do that. So have a real estate expert like myself come in, evaluate the house before you touch or make any big decisions, because we can save you a lot of money, time, and headache if it's not necessary. You don't need to make renovations to make the most profit for your house. Sometimes houses without renovations are more profitable than houses with renovations. So that's just me. Being proactive is the most important part that can save you a lot of money and prevent a lot of mistakes. So good job to all of you guys being on this call and being proactive.
There was one other question that came in. They want to know, would it be better to buy a less expensive house and wait and hope that the prices go up, considering all the competition for first-time homeowners, or buy a more expensive house, considering the low interest rate? Are there less buyers or fewer buyers for the higher cost, assuming that they can afford it?
Very good question. That's going to be a personal finance decision. And also, what I always advise my first-time home buyers is I would much rather see my first-time home buyer purchase a house that can last them and serve them for a long time. The reason being is no expert on this planet knows where the real estate market in Suffolk County is going to be in 5, 10, 20, 30 years from now. If you're purchasing a smaller home because it's cheaper and you're more likely to outgrow that home in 5 years. You're purchasing in a high market right now. If the market were to take a downturn 5 years from now, you may not be able to get your money back out of that house. Now, do I think the real estate market's going to take a downturn? Absolutely not. I'm very confident that it won't. However, at the end of the day, no expert really knows. If you're purchasing a house with bigger bones that can serve you a longer time, and if the market is in a downturn, you won't, and you don't have to sell your house because it's enough space, you're able to withstand the ups and downs of a real estate market. If you're holding on to a house for 10, 20 years, that home's going to appreciate enough in value, and also you will be paying down equity over that course of 10, 20 years. So even if you're in a down market in 20 years, you're still going to have enough equity to either profit or get your money back. So I usually recommend to my first-time home buyers, if you can and you are comfortable with the monthly payment, purchase the home that's going to last you a longer amount of time. Realistically, first-time home buyers are making the least amount of money they're ever going to make. Usually incomes go up as you mature and become more established. So it may be harder now, but you are running less risk in the future by purchasing the home that can serve you for the longest amount of time. The best property to own is the property you don't have to sell. Good, very, very good question.
Thank you. Are there any others? Last call for questions. Okay. Well, I want to thank everybody, especially you, for your time tonight. Again, this presentation has been recorded, so it will be available on our library's YouTube channel soon. If you have any questions, you can contact us. Mr. King of Homes is readily available as well. Hope everyone is well and has a great evening.
Thanks, Crystal. Thank you, guys. Again, reach out if you have any additional questions. Take care. Good evening.
Perfect. Thank you.
Thank you. Bye, Jose.